I'm going to take some live trade examples, maybe I'll replay the market so I can show you guys, we can both look at it together. That way you can understand better. So let me just shrink down price here so that when I'm scrolling back, I'm not able to see anything. So let's just trade together now. So let's say out of 3 trades, you win 2 of it, or out of 4 trades, you win 2 of it and you lose 2 of it, you still be profitable. Why? Because you have more winning, you have more risk to reward. Right? Let's say you're risking 1:1.5 and you win 2 of those trades. That's 3R. Then you lose 2 of those or the other trades. You see, that's 2R you've lost, but now you're up 1R. So that one has to do with trade management and risk management. I'm going to get to that. Let me show you first how to read price and how you can easily spot these levels. You're not going to get it today, but if you start today, you get it by the end of the month or by the end of another month. So it's a gradual process. Just believe in yourself and yeah. Okay, this is actually another trade here that we took a long time ago. Let me break down this one for you real quick. Okay, so I'll just play price here. Look at how price is forming. Look at the formation of price. So price comes out candle by candle, candle by candle. Sometimes when it first wants to start forming, you will not see it. You see it after it is formed. So in real time, it's difficult to see it. Okay. Now in real life, this is what you're going to be seeing. Actually, this kind of thing, you're not interested in anything looking like this. This is nothing. There's a good week there, yes, but it's just one. We want that price to come back to that area at least 2 times. When I say 2 times, I mean like when price goes there, it reverses, it comes back again, reverses, then it has confirmed the area. Or price comes there and price is being held up in that area. I mean, it's up down movement, but it does not break that range. It stays there. So these are the criteria. So let's look at it. So now you can see that price got here first with this week, dropped, came back again. It did not go past this area or 2. Like you can look at it, you can see 4 good candles there, right? 2 longer ones and 2 shorter ones here. So this area here is a very, very important area. You might look at it like the weeks are not actually many, but if you look at them, you can see that we have at least 4 weeks, which is one of the rules of our good of our setup, right? So the rules of the setup says we need to see 4 visible candles, meaning you don't have to like strain your eyes to see it. You need to just see them to be they should be visible. So now you can see that there are visible candles here. This is where the market is as at the time we are drawing this key level. Now, how do you draw your key level? Do you know how to draw your key levels?
Yes.
Okay, that should be, I don't know what module that was. Was it module 7? I don't know. So I'll draw my key level now from the opening of this candle from the first week that attempted the breakout, right? This is the first candle that attempted to go beyond this point but failed. So now it gave birth to the other ones. The younger generations came and attempted also, but they failed. So they gave up and continue going down because they don't have enough power to push this market up. So now we'll come here to the first guy who started the movement, which is this guy here. I'll start from the body of the candle here, the open, and I'll highlight the entire week like that. Then I'll stretch it out. As simple as that, that's how you draw key levels. The weeks. Pay attention to the weeks. Now, if you were drawing it this way and there were like candles that are entered here, there's no problem. As long as you have this first one correctly, that's how you should draw your key levels, right? So I'll just name that ACP. You know what this ACP stands for?
Areas of condensed, something like that.
Area of condensed pricing. Do you have a notebook?
Yeah. No.
Yeah, you should have a notebook. You should have a notebook where you jot some things that it's not like you copy everything, you just jot some important information down. Because when you watch these videos, at the end of 2 weeks, you don't feel like watching it again. But now, inside that 2 weeks, you've forgotten some things that I mentioned in that video, which is very important. So don't just watch it like it's not a music video. You have to watch it and actually take something out of it. So you need a book. After like that, you can look at your book when you're trading. You can practice these things. That's the process. When I started learning Forex, I had a book. That book is even in my bag up to now. If I go back, that book is still in my bag. I still have it. I have all kinds of sketches inside. So you need to be hungry for this thing. You need to be serious about this thing. So, this is a good area, like I said. Now let me play price and see what happens. Okay, now after you have this, the next thing you have to do is you have to prepare yourself for the trade. So the market is quite far from your key level. So prepare yourself before the market comes. It's like you're preparing for an exam. You read before your teacher comes and set the test. So now we have here what are the outcomes and what are we looking to do here? We've drawn our ACP area. Clearly, price is below our ACP area here. Now, what you want to do is you want to make sure that you get your entry right, your stops right, and your targets right. So for the entry module, we just go a little bit deep in the zone, like I told you, right?
Yeah.
Then I will look for the nearest high here. But as you can see, we don't really have a nearest high. The nearest high is this one here, this one, or this one up here, which is too much for a key level. So looking at this area here, I'll confidently place my stop loss just on top of this candle. Or I might just keep it here at random just because I don't have a high to measure it out. But if I'm looking at the gap from here, from the opening of this level to this area here, I see that, okay, this gap here is good enough for price to flop. If price should break past this level, I don't want to be in this trade anymore because why? My level has clearly been broken and I'll be looking for what?
To buy.
Yes, I'll be looking to buy. And now you cannot be in a buy trade when you're still having a sell trade open. So you need to make sure that your stop loss is at the point where if this market is to break, it should stop me out on this trade so that I change my mind and I get on a buy quick, I get my money back. That is it. That's how you play your stop loss. Don't put it up here. You see that, okay, if price is to reach you up here, what has price done? Price has broken this place. Now, that's what happens to some traders now. They get carried away with all of the pain of losing. They are now in drawdown. They are regretting. They are suffering and everything. But they don't understand that the market is providing them with another trading opportunity here. But now your mind is clouded with this losing trade. Meanwhile, you would have been stopped that long ago. Change your mind quick. Come back here, buy your thing, and get your money back. And go about your day. That's just it. So I'll put my stop loss where I know it's appropriate for me. Like here, I know that at this point here, this market is good to go. Now I'll make sure that my risk to reward here is 2, therefore 2 times what I'm risking. I'm good at this point. Now I go to my calculator. I've not gotten to that module yet. So when it comes to this one, I'm not sure you're going to understand. I'll go and calculate my risk, position sizing, make sure that I know the exact lot that I'm putting here. Do you know how to calculate lots?
No.
Okay, don't worry about that. I'm getting to that. So we'll make courses on that. You calculate your lots. That's the lots has to do with the position size. You need to know exactly how much you're risking on a trade. Don't just open a trade or just guess whatever lot size to use. You need to know how much you're putting on this trade. So inside this red spot here, how much do I have here? I'll assume that, okay, I have $200 in this space. Okay. Then now in this green space, I have how much? If I have 200 here, therefore in this space, I should have like 300 instead of 400. The reason is because I'll open 2 positions here and I'll close one at midpoint, right? So if I close one at midpoint, that means I've taken half of my money out and the remaining money that will run here will be $300. So that'll bring me at a total of $300 at the end of this trade. So now I'm waiting for the market to come. I already have my plan. My plan is clear. I want price to come here and bounce down. Or price should break above and bounce and go up. I don't care taking a loss here. As long as price breaks above, I'll take my money back. So once you have that, you've built your mind. You're not scared of losing. You're not scared of the market anymore. This is how you solidify your mind. This is how you prepare yourself. So you have to trade emotionless. I mean, that's the most hardest part when it comes to trading, actually. Because when you're trading live money, you actually have you're attached to it. You feel like there's some kind of connection with the trade. Like when you open a trade, you are restless. You just want to look at it. When it's red, you're like, hey, no. You have to detach yourself from the market. That's having the proper mindset. And how do you have that? You have 2 outcomes. You prepare your mind, I'm taking a loss here, no problem, and I'm buying. Boom. So I'll play the markets. Okay, the market is approaching the area. I don't know. Okay, let's look at that. Let me shift this thing and bring. I don't even know if we got tagged here. Okay, we did not get tagged, but you can see that price entered this key level, and I'm pretty sure it's going to start dropping from there because once price touches that money, there's a lot of money here. So when it touches it, it's just like you just untied something up, and all the weight is falling on you. So that's what happens here. See that when price touches it, the candle is even unable to fall. It just starts dropping with the wick at once because there's too much volume. Yes, you can see that price just dropped straight to our target. But even though we didn't get tagged in, on a trade like this one, of course, it's not every position that you take your entry too deep. Sometimes when you have a tiny key level like this one, this key level here is actually tiny. So if you could enter at the beginning of this key level here, that would be fine. But when you have a key level that is thick, you want to make sure that you get your entry a little bit deep so that you can reduce your stop your risk. How can I put it? So you have better entries to avoid a lot of drawdowns and stuff. So that's the essence of. So let's assume that we entered here at the opening of this zone. For some reason, maybe because this key level here is thin, we would have gotten in on this trade and immediately it got out here. As you can see, the market just came down here and closed out. So now you want to let's keep doing price if we're going to spot new levels. See, price even came back again properly and dropped. And now, anyways, that's like two trading opportunities. If you missed out on this one, therefore this one should work for you. Why? You should enter here because the last trade, like I said in the other module, the last trade should determine if you enter again. The last trade here rejected with a wick, so I'll enter. If you rejected here with a candle, I'll not enter this thing. I don't trade candlesticks. So here we have wick, we have wicks. I'll trade. If I have wick, then here, this last trade here, enter with a candle and drop. Nah, I'm not interested. So we had a wick, therefore this would have been a good trade. So like just on one setup, we've taken two good trades. Let's keep playing. Now that key level is old. Let's look for fresh key levels. Let's see what price does after that. Now look at this. The thing is, this one is not that good, but I was looking at this area here. We can see this wick rejecting this area here, but I don't like this one, so I'm going to ignore it. Okay, look at these ones as well. This is what I want you to be paying attention to. Your job now is just to look for ones that align properly and look for that congestion in price. Once you spot that you have a key level, you can see, I don't like this one. But you see that when price went above this point here, price still came back here with a week and went up, but I don't want to look at that one because that's not a key level that I'll personally trade. I like my key levels to be clear, as clear as possible. Now, look at this price action here. Where can you see a key level or where can you trade from this market?
Like from the top.
Yes, this top is looking good. This is what I wanted you to see. I wanted you to look at this area. Even if I stretch this way, you still see that they even started here. That's a key level right there. That's a beautiful key level right there. You feel me? Trades like this one, I don't mind taking it as long as another one. It meets up with all the criteria. It meets up with my how can I put it, with my rules. As long as all my rules are met, I take the trade. If I take a loss, no problem. Because these are the trades that I take that put on my table. I take the trade regardless. You don't have to win every trade. This thing is a very uncertain thing. But what you have to know deep down is that if you're following this method, at the end of the week, you are going to take more winning trades. At the end of the month, you have more winning trades, and that's going to put you on an edge. So now let's assume that normally considering this kind of candlesticks entering here, I would like to enter a bit deep on this zone like that. And my stop loss, now look at this wick here. We have a very, very long wick here, which will be appropriate for my stop loss, but that's too far for me. So I'll just bring it down and keep it where like this. I think this should do it. So let's see how this plays out. I don't know how this will play out. I've not actually seen this one. Nice. Did you see that?
Yeah.
Let me stretch it out. Let's see very well. Maybe you cannot see it. Look at it. Can you see this wick here? This wick.
Yes.
Okay, now you see that the market entered there and just dropped to your TP here, all the way down here. Look at it. This is it. This is the candle that took your profit here, not this one. So it's two candles. One enter with the wick, closed, then the other one took it from there and bam, smash your take profit. Boom, you're out. You can continue your day. Then what happened when the market broke up here? Let me play price and let you see what happened. Okay, price drop. But before price dropping, you would have taken at least 1-to-1 on this trade. And when you take 1-to-1, you move your stops to break even. That's how I teach you guys to manage trades here. Now let's look at this. Assuming I was buying here, because normally I will not know where price will go from here. Assuming I was buying here, let's say I'm going a bit deeper in this zone, of course, like that. Then I have my stop loss. I don't have a low to put my stop loss at. So I'll just estimate an area where I know price should break out and, end like, the same explanation I gave you previously. I have it there. Then I'm aiming for what? I'm aiming for 1:2. But now for some reason, price made it to 1:1. Look at these numbers here. You can see that 1-to-1 price already smashed my targets. Then when this smashes my targets, what I do is, if you were monitoring the last setups that I sent you guys, if you go and look at it, when I say TP1, move stops to break even. Have you seen that?
Yeah.
Yeah, so when your TP1 like this, when the market touches the midpoint, like TP1, because there are two targets. The first target is here and the other one is at 1:2. So the first target here that hits 1:1, boom, you make sure your stop loss is moved to your entry like that. So you go on your Meta 5, take your stop loss, push it up, and put it at your entry. I sent you that video already. So you break even. Once you break even like this, you are safe. So what will happen now is the market will stop you out. But now you've taken what? You've taken half of your position. You've made money still. Even though that trade was meant to be a losing trade, but you have made money from this trade. The majority of traders buying here will take a loss. So I took a screenshot on my phone. Let me send it. Let me see if I still have it. Let me just show you what my P&L looks like. Let me just show you what my trading app looks like. Okay, I'll just post it in the public group so you can check it out there.
Okay.
Okay, go and check it out. Look at those trades and look at the amount of trades that I won. Then you see that some of the amount of money there, like this last GBP trade here was $18, the last one. That's a break-even trade. That's a trade that it came back to my entry. Then if you look at the other ones here, you see $88. Those are trades that came back to my entry. But now majority of the trades just went ahead. So that's what I want you to, that's how good your stuff will look. As long as you maintain this particular this trade management strategy. TP1, break even, continue with your life. Have you seen it? Have you seen a screenshot?
Yes, all blue.
Good. You can see that I took just like one loss there. That's the one that just reversed. That particular trade that I took that loss on was actually supposed to also be a break-even trade. The reason is I was asleep. So when price moved all the way to TP1, it came back to my entry and stopped it out. So that's what happened there. But that if I was up and managing that trade, all of it would have had no red on that trade. That's just exactly how your stuff is going to be looking few weeks from now. So you just need to keep working on your shit, bro. Let me close this thing out. Sometimes this thing just interrupts me. Okay. Now we have moved on from here. This is how you follow up. This is how you follow up a key level. We have a key level here that we've taken like 2 trades from, but price is still like, reacting to this area pretty good. Why? Because price dropped from here. You could have potentially taken a trade here. I would normally take a trade here. I want you to look at this. Don't look at the market like you're looking at long weeks and don't be looking at this stuff like I told you now. Don't look at this thing. Don't look at this. Now, look inside. Look beyond this. When you look inside here, you see candlesticks and you see wicks. Pay attention to those wicks, bro. Now, price broke this area here with a black, long, huge, impulsive candle. Then retraced back with the wick. This retracement here is your retest. That's your trading. That's the trade you're supposed to take. Because normally, we are striving to confirm that this area is broken. And we can clearly see that this area has definitely been broken with this kind of candle. There's no way you tell me it's not broken. So what you have to do now is what? Place your entry back there and sell. That's just it. Sell it. Sell it. So this week, this long week here, this one candle would have been your trade. Tag you in, bam, straight profits. Boom, like that. Just like that. Now, let me play price again and see what you're doing. I like these wicks down here. Let me see what price does further, but I'm not trading from it. I like it. If you can like do something more, I'll definitely do something with it. Now, looking at this here, this area still looks valid to me. I could take a sell here. Then now, when I'm placing my stop loss, since these ones here are too high, or instead of looking at these highs here, I'm looking at these highs and these highs. Because sometimes the market will break like this past, but when it comes back, you still respect these previous highs. So I'll just keep it like maybe the same stop loss with this one. So I'll just keep it like that. Same trade, just the same trade this way. 2R. Okay, let's look at this. Price came here and swiped us out immediately. No, it did not. It did not. It did not. It actually worked out. Let me zoom in. Let me zoom in for you quick. Some of these things playing real quick that you don't see it. Look at this candle. See this candle?
Yeah.
This candle entered my trade and dropped here. You can see that. I don't know if you can see these ticks. You can see the ticks here of the trade where the trade went. So you can see that there's a one tiny arrow here telling you that the trade actually closed here before this candle come out. So this would have been a very good trade. Let's assume that okay, the trade was here and it did not quite trigger it because there's something called spreads in the market. So sometimes it might be too tight for it to actually close. But what you have to understand is your first take profit has already been hit. And what happens when that happens? You break even. So one way or the other, you still make money here without taking loss. That's how I avoid loss. I avoid losses in this market. So this is a very, very good trade. And this is another one here. Price still broke below it and came back. I'm still interested. But now at this point, I'm no more interested in this area. Why? Because I see this kind of dirty move. I see a lot of candles penetrating this area and I don't like it. Even though price gave a perfect retracement here, but still, I'm not interested in that area. So let's keep going. So when you're looking at this thing, I've told you look at it in form of on swings. Look at it from swings, swings. Just look at it like that. Like that. Break down the chart in segments like this and be reading it. Once you've had a valid key level, you can trade that key level for an entire week. These two candles here kind of look good, but it's slanted and it's not good enough. So now, if you look at it, now, my own way of trading is different. When I tell somebody I trade support and resistance, they think I'm drawing old levels, like I'll come and draw something like this. And now, I trade recent pricing. I trade what the market is doing now. But what you see on YouTube or what you see people doing on YouTube will come here and draw highs like this. It'll tell you to this is resistance. You've seen this?
Yes, I've seen that. That was what I was doing before.
This is garbage. This is garbage. We all did it. When I jumped on trading, this is what I was doing. It's garbage. This model of trading that I'm telling you, you will not see it anywhere. I'm the only one who trades like this. Only person. All these things, what they'll tell you online, they themselves, they are not even making money with these things that they're doing. They are not. They cannot, because it does not. Price comes there and reacts to these things, but they don't know why price reacts to it. Sometimes price will bounce from it, but majority of the times price will not, and they'll take losses. But me, I come in, I zoom into my charts because I'm trading what the market is doing. If I see what the market is doing now, that's what I'll trade. So that's why I have a bunch of pairs that I'm looking at. If I was looking at just one pair, I'll probably have like one setup in like 1 week. So when you look at a bunch of pairs, a week cannot go by without you taking like 3 solid to 2 solid trades. I'd have actually liked this area here, but it does not look good. The weeks are not a good. The weeks are not good enough. But still, price will still react to it. See, price just broke above it, so you have to be careful. See, any area that is congestion, you see price doing something there. Look at this place. But that's not typical. There's no wicks. I just want us to take one last example. Okay, I actually like these lows here. I like this. I like this because of this week. You can see that price entered here, pushed up, came back again with multiple weeks and pushed up. If price could come back down here, I'm looking to buy. Stop loss should look like that. Good. Okay. The meeting will end here, bro. You can see that. Have you seen that? Are you there?
Yes, I'm there. I'm seeing it.
Beautiful. I just wanted to see how effective and how everything is. And now this is still another level here that I'm seeing. This is still another one this week's here. But it's not that strong, but it's still something to look at. Now you can see how I spotted these things here. We've all traded here. I've not taken any loss. I've taken 2 break-even trades and the rest are winning trades. That's how it's it's how can I put it? It's practicable. I want you to go on your price on your chart, bro. Scroll back, read it bar by bar. Read it, read it, read it. Look at these areas. Draw it. When you see something that you suspect, just use a tool, draw it, and see what price did to it. Draw it, draw it, draw it, draw it. Make sure that they're aligned. You can see that all my levels are aligned. You can see what price did here. I was trading a funded account. I would have really passed it by now. That's what I'm teaching. That's what I'm teaching you to do. Price did not react to this extreme, this push, this kind of, because when you go on social media, that's what you see. You see people trading here saying order block, this, that, bullshit. Bullshit. Price reacts to orders, price reacts to money. Where's the money? Where's the money in the market? This is where the money is. That's where price came back for it. And when price tapped it, look at where price is at. Because there's enough money here to push price up to this extent. Enough. So I hope you've picked up something today. I want you to go back and try to spot. I want you to come send me stuff or maybe like screenshots or areas I suspect that are the areas. Look at them, draw them out, do your own personal analysis on them. Study them.
Okay.
Study them. If you feel like you're confused at one point, go back to the course.
You're right. This your
what?
Recently, like it can just come like once in a week.
What? This setup or what?
This setup to trade.
Yeah, this actually took a while. Like, you can see that before we traded here. This was look at this time down here. You can see here Thursday, 17 June. Let's say before we're taking this trade here, this is like 16 September. So yeah, actually an entire month, an entire month. But now before this thing comes down and give you this other trade, you've been trading on the other 15 pairs. So you always have trades. That's why I give you guys trades back to back.
Okay. But I usually watch, they used to say that you have to have like one particular pair to trade.
It's all anybody's perception. Price action is price action. I know how to trade this market, so I trade any pair because I can read any pair.
Okay.
Those guys that trade one pair, they are still struggling with profitability. They are sleeping on it every day. They are taking losses. What's the essence? We just want to make money here. It does not matter whether I master one pair. There's nothing like master one pair. Pairs move. Every pair moves differently, but price action is price action. Why? This pair is moving differently because of maybe the prices of crude oil has gone up, the prices of this has gone up, the prices of this has gone down. So every pair will go down, go following its economics. So don't say I'm mashing one pair, sleeping on one pair. You still take losses like a normal trader. I don't know where you're running from.
It's true.
Yes, master price action. You can read any pair with this, even gold. Read any commodity you can trade with this thing.
Okay.
Do you have any questions?
Okay, but like my question is, like you said, if you enter a trade, your stop loss might be like the recent
Yeah.
What if your account balance is no big for your account to sustain that losses?
Yeah, that's what I'm saying.
It might blow.
I'll make videos for that. So that's called risk management. You can see trade the $5 account with that kind of stop loss. So it's your lot size that matters.
Okay.
Don't worry about that. I'll make videos for that. Just go and work on this that I've told you now. Okay, man. This is the end of the meeting. Thank you for showing up.
Okay, bro. I appreciate.
All right, man. Go practice.